there are kind of four primary types of loans that I want you to talk about: FHA, conventional, VA, and USDA.
Buying a home is exciting, but the process can be overwhelming. Trying to understand all of the paperwork, financing, and what you need to do can be stressful. Without knowing what you're doing or where things stand, it's hard to move forward. Or worse, you could make a mistake that costs you thousands of dollars. That's where the Get Me Ready to Buy podcast, hosted by Jeff Jones, comes in. Jeff is a realtor, coach, and entrepreneur. He helps take the guesswork out of home buying by providing you with the details, resources, and professionals that make the process easier to understand so you can successfully buy your next home with confidence. Now here's Jeff.
Hey, thank you for joining me for this episode of the podcast. Today, we're going to be talking about different types of loans that are available. There's four major types of loans. We're going to be talking about those today. And I have as my guest, George Sago, and he is Vice President of the mortgage for Bank Plus here in our local market in the Mid-South, Tennessee, Mississippi. And so we're going to just jump right in. And George, tell us a little bit about you, kind of where you are, where you can serve.
Yes, sir. Yes, sir. Appreciate you having me. As you said, I am Vice President Mortgage Originator for Bank Plus Mortgage. I've been in banking for probably a little over 18 years in different roles and mortgages over the last 3 to 4 years has been kind of where I laid my flag, and man, I've loved every minute of it. Currently, I operate in the Memphis, Tennessee, the Mid-South area where we serve. I do loans really all over Mississippi. I've done mortgages in Texas. That's one thing about being with a bank. We have some special privileges as far as where we can go in and do mortgage loans. So a lot of lenders you may go to can only do loans in certain states. When you come through a bank, we have access to any state we really want to. So that's the good thing about if you were to do business with me, that no matter where you are, I could help you get that mortgage done.
Okay. And again, we are in the Mid-South and Memphis metro area. And I'm a licensed agent in Tennessee and Mississippi. George is here in our market as well. If we're not physically in your market where you are, because you may not be in our market, we can help you find somebody in your market, or we might still be able, like George said, he can probably help you in that market wherever you are.
Yeah.
But there are from just, what I know that there may be all kinds of different loans out there. There's we call jumbo loans that have to do with an amount of money, how much the mortgage and stuff is. But for our purposes today, there are kind of four primary types of loans that I want you to talk about: FHA, conventional, VA, and USDA. So tell us when we hear about the FHA loan and how the federal government is letting us borrow money from them.
Exactly. Yeah. So you mentioned the four types of loans: conventional, FHA, VA, USDA. The latter three are government, government-backed loans. So you talk about
We're not technically borrowing the money from the government.
Right. They are guaranteeing the loan for the customer if they were to default. So the FHA, for instance, they charge what they call a funding fee, and that funding fee is the client's fee to use their guarantee for their loan. So what they do, they guarantee that loan for the bank, and they also allow the client to be able to borrow money from the bank with I guess you want to say a lower criteria for qualifications as far as credit score, debt to income ratio, those things. What debt to income ratio could be higher with the FHA loan versus a conventional. Credit score can be lower for an FHA loan versus a conventional. generally you will see a credit score around 580, as low as a 580 for an FHA loan, and a debt to income as high as 55% to qualify for an FHA loan.
Okay. So that's kind of the quick overview for FHA loan. The other one, because it's typically, unless we're working with a vet or unless we're working in a particular area out, we're going to be dealing with FHA and conventional loans. So
Right.
how is a conventional loan different from the FHA loan?
So yeah, so the FHA, that's guaranteed by the Federal Housing Administration. They're going to guarantee that loan to the bank for that client, and if they default. So conventional is is not backed by a government agency. So a conventional loan is typically a bank loan that goes under private corporation guidelines. Freddie Mac, Fannie Mae, Freddie Mac. Those are the guidelines used for conventional lending. So, but that is a loan that's going to have a higher credit score requirement and a lower debt to income requirement because they are looking for a certain quality of a client to qualify for those loans because they don't have that protection on those conventional loans. Now, the benefit is to a borrower if they want to go conventional or FHA. Some things about FHA that's different is a conventional loan. You can get rid of your mortgage insurance because there's mortgage insurance when you're applying, when you're getting these loans. You have mortgage insurance on a conventional and mortgage insurance on an FHA. But with an FHA, that mortgage insurance does not go away unless you refinance it into a conventional and you're under 80% loan to value. And what that just means, if you want to have 20% of equity in your home to get rid of your mortgage insurance, and then that way that saves you some money on your payment each month for that. So the conventional allows you to get rid of that mortgage insurance once you are under that 80% loan to value for that property. So I guess the benefit for the client is I can save money there, and I know I fit within that criteria for the conventional. I don't have to I don't have to, I guess, use some of the I don't have to kind of go through some of the stringent uh, criteria as far as what a home has to look like, or different things that you have to go through and pass on inspections with the FHA versus a conventional. So it's easier final approval process for a conventional versus FHA.
And of all four loans, that's going to be the easiest one for, um, the buyer client. It's going to be the easier loan for the borrower to be able to get into, like you said, as far as condition of the
Right.
house,
Right.
inspections, that type
Yep.
thing.
Yep.
They're going to be a little bit lower there. So FHA and conventional. Now, who's eligible for a VA loan, and what's the
So
benefit of getting that?
yes, the Office of the Department of Veteran Affairs. So the VA loan, I think it's a great product. It's a great loan if you qualify for it. And so, in order to qualify for that particular loan type, you have to be a veteran, a military veteran. Um, the greatest thing about it, there's 100% financing. There is no down payment requirement for a VA loan. So, and another thing that I just mentioned, mortgage insurance with the conventional FHA, there's no mortgage insurance on a VA loan. So the vet can get into the home, no down payment, no mortgage insurance, and they tend to be able to. And the qualifications for this too are, I guess, a little bit less stringent as well, as far as credit score, debt to income ratio. I've seen debt to incomes go up pretty high, but it's ticky per individual. You got to see, hey, what's going on with this particular borrower. But I've seen them close to 60% debt to income be approved for a VA. So it's a like I said, it's a great loan if you fit that mold. You're a veteran. You avoid having to come up with down payment. You avoid that mortgage insurance, and you're able to get into the home where you want to get in. Pretty good. And then that credit that interest rate. I'm sorry, that interest rate for those. And I go back to FHA too. The interest rate for the FHA, for the VA, for the USDA are going to be lower as well as than a conventional because they have that government backing on their loan, so the risk is less. So that's why you have lower interest rates on those particular mortgages.
Yeah. And the interest, you mentioned the interest rates being a little bit less. They're based kind of on the market as well,
Right.
and on your credit score, which has to do with the risk that the lender may not get their money back.
Exactly. Yeah.
The worse off somebody's credit score is, the more risk the lender has in getting their money back. So they're going to charge more for it in case you bail. They've made some
Right.
money off of it,
Right.
And we talk about that 80%. You don't have to have 20% down to buy a house. With how much? What's the lowest percentage down for an FHA?
3.5%. So 3.5% is the minimum down payment for the FHA. Minimum down payment for conventional is 5%. So that's kind of some things you
Okay.
have to kind of consider when you're making a decision on which loan I want to go with.
Gotcha.
Yeah.
Did conventional used to be 3 and it changed, or am I? Because I was thinking there was a 3%.
No. So when you hear 3% around that, these are like specialty products that
Okay.
a lender has, but the standard minimum for a conventional loan is 5%.
Okay.
Yep.
And so if you're doing a conventional loan, you're putting 5% down. You mentioned the mortgage insurance that you're going to be paying extra, and that's
Right.
added to the principal and interest payment. That's
Correct.
to insure the bank against that 15%. Between 80% down and you put 5% down, there's a 15% gap, and they want that money. So you're paying more for it to basically insure the bank, the lender, that you're going to be paying that money back.
Right.
And
Yep.
if you were to default on it, they know they could probably easily sell the house for 80% of its market value. And then that insurance kind of pays them back for the difference, lets them recoup something out of it.
Right. Exactly.
So
Yep. They,
so those
hey,
things are in there.
you hit it on the head. That's it. I was just about to say that you hit it dead on the head. So
Yeah.
that insurance is exactly what it is. It's the bank paying a third party insurer to ensure that 15% or that 20% that you have to get to before it drops off.
Yeah.
Because again, they know they can get at least 80%
Yeah.
of the value, right?
It's kind of like, you may see these golf tournaments that they have a car sitting on a green that if you hit a hole in one at this particular hole, then you
Right.
could win a car. Well, whoever's doing the sponsorship is paying an insurance premium, and it may be $200-300, $1,000, whatever, that
Mhm.
somebody's not going to win the car. But if they did, the insurance is going to pay out and pay for, pay the
Right.
car dealership for the automobile that they were giving away. And it's kind of like that for the mortgage insurance. It's an insurance you're paying, and insurance doesn't protect you. It's designed to help you with funds if there's a catastrophe. If you have a car
Right.
wreck, if you have, tornado that rips off a roof, well, the insurance helps you so you're not out all that money up front. You've been paying all that to
Right.
protect you. And the bank does the
Right.
same thing for that. So
Yeah.
we've dealt with FHA, we've dealt with, I've had a question about the VA. You mentioned for veterans. What
Right.
about active service people? Hey, thank you for hanging with the Get Me Ready to Buy podcast so far. You need to know how ready you are to buy a home, so get your score at readytobuyscore.com. You'll pick a few statements, get an email telling you what your score is and what you need to focus on to get ready to buy a home. If I can help you in my market, which is the Mid-South, the Memphis metro area, please let me know. If you're in another market, I've got agents all over the country and in a few countries around the world. Reach out to me and I'll connect you with one of our agents who can help you get your home bought wherever you are. Now, back to the show.
Yes,
Does
they
the VA work for active
it
service?
will work for active service as well. Yep.
Okay. So
So
you don't have
if
to be out of the military. It's either prior military service or current military service. They qualify for that Veteran
right,
Affairs
yep,
loan.
you will get a certificate of eligibility from your branch of the from the VA,
Okay.
and it will tell you that you're qualified for your service. A lot of times, a DD 214 is the form where the military or the vet knows that, hey, I am qualified for this VA loan, so they will grab their form or grab their certificate of eligibility, and it'll show them, hey, this is what we can get you as far as the VA loan goes for you.
Okay.
Yep.
Now, are they limited to only being able to buy a house one time using their VA benefits?
No, you can use your VA benefits multiple times. So if you buy a home under VA, and let's say you sold it, you can use it again. Or if you didn't sold it, if you still had some eligibility there, you can use that loan again as well. So you can have multiple VA loans sitting out there if it fits within the guidelines.
Yeah, and that's where your lender can help you work with the VA to figure out what your actual eligibility is
Yep.
for all that. All right, so we've dealt with FHA, VA, conventional. Now let's talk about USDA loans, and that's not
Yes.
available everywhere in the country, but those who have access to it, tell us about that loan.
Right. So USDA loans are rural development loans. When people hear rural, they have this image in their head, but it's much broader than just being out in the country. You really just have to know what areas that are being um, focused on by the USDA as far as trying to get individuals into housing in these areas. So the USDA has a website where you can go in and put in an address to see if that home is qualifies for that particular loan. Again, it's 100% finance loan, um, no down payment requirement for the USDA, which helps people get into homes. They recently just increased their income limitations, because there are income limitations on the USDA. They recently increased it for a 1 to 4 family, 1 to 4 person family. That it's $110,000 household income requirement there. So five and higher, I believe it went to 146 is what it went to.
Okay.
146 uh, for if you have 5 or more people in the household. Um,
That's
so
income. That's not house price. That's
Yep, that's
income.
income. Exactly. That's income. Um, Now, the requirements as far as qualifying for this loan as a borrower, you want to be around a 640 credit score. Um, 640 or higher will help you qualify for that USDA loan. Usually, the debt to income ratio is a little bit more reserved, and you're looking at around 43%, 45% maybe. But they're a little bit more relaxed, not relaxed, but they're a little bit more reserved on what they want your debt to income to be for that particular loan as well. So,
Okay.
a great product. Again, you have to fit. You got to find the home, and you have to make sure that your household income fits within those guidelines. If that's the case, that's a product where you can get into a home with no down payment. Once again.
Okay. Um, Yeah, and it's surprising about USDA, where I actually live in Olive Branch, Mississippi, is one of the highest trafficked areas where I live, with lots of shopping and lots of vehicles coming
Right.
around.
Right.
And when we bought this property in 2015, it was considered USDA. I
Wow.
didn't take advantage of that, but I could have.
Right.
Then, because of population shifts, because of economic development in
Right.
areas, I know since I've had my real estate license, since we bought this property, the USDA lines have changed twice. The second time was just recently. It changed the lines, and ours got bumped out of that.
Right.
But that was, you might think that it's like you said, it's got to be way out in the country. It's just check that out. The link will be in the show notes to be able to check
Okay.
out the USDA website.
Right.
And I'll get to that in a minute, at the end as
Okay.
we wrap up. I'll have another
Okay.
link to something specific to George that we'll have in there that I'm going to ask him about at the end as we kind of get this thing wrapped up.
Right.
And so let's put out a scenario. I actually have a property listed that's in a USDA area. Um,
Okay.
and I wasn't prepared to talk to you about this, but I'm going to ask you about this because
Okay.
it may be something you can or can't do, but you may know a little bit about. I had somebody mention to me about this particular property because it's in USDA, being able to add a particular product to it that allows the buyer to get it at 100% financing, plus maybe take advantage of some Mississippi Home Corps money that could help them with down payment.
Mm-hmm.
Some people talk about that as, I guess, stacking the benefits on there that help. So, this particular house, you could need a buyer could need $20,000 in cash for down payment and closing costs. And if they did USDA and 100%, that would take care of probably half of that or more. And then if they had some money from either being a first time buyer or teacher, law enforcement, whatever else, they're almost able to get in for not very much money. Can some of those products, depending on, I go the lender, but can some of those products be used together that can help a buyer be able to get into a home, which helps a seller out, so the buyer's not asking the seller for $6,000 or $7,000 or $8,000 toward closing costs because they've got access to it from other stuff? Can some of those
Right.
things, and we're not talking about all the different products today, but is it potential to put some of those different elements together depending on the type of loan that you have?
Yeah. Absolutely. Absolutely. Just let's take Mississippi for example. You mentioned Mississippi, so Mississippi Home Corp is a first time home buyer bond that or you want to say MRB 7 is a first time home buyer bond that you can, which is $7,000. You can actually put that money with the USDA with the VA loan, even though they don't have a down payment requirement. You can take that money and you can use it for closing costs. Um,
And I deal
uh,
with closing costs in other episodes
yeah,
about what goes in that: prepaying
right,
insurance, prepaying
right,
taxes, the lawyers involved, title insurance, title search, all those different things. And
yeah,
that takes money, and we
yeah,
typically say anywhere from 3 to 5% of the value of the home could be your closing costs and prepayments. Um,
right,
so that goes along with that 7,000 for a first time home buyer. If they're buying a 200 or if they're buying a $300,000 house and they're not having to put, 5% down because it's 100% financing. So all that's
right,
financed. And
right,
then if their closing costs and stuff was 9 to 10 grand and they've got 7 grand coming from the Mississippi Home Corps where we are, and there's probably things like that in other states,
right,
they're looking at being able to move into a house for $2,000-3,000 out of pocket, as opposed to
yeah,
24,000 dollars out of pocket.
right,
So they're able to, if they can make the payment, then that's what they're paying in rent. It's wise to look at all those options there, and then leveraging that. They're not coming back and asking the seller to give up some of what they've earned in their equity to help the buyer be able to move in. So
right,
it benefits everybody to leverage those products. So
right,
make sure you got a lender who knows what those products are where you are, and don't just think,
exactly,
well, I could never buy a house, or I have to give in to, whatever the buyer's requirements are and sell it. I've got to give in to all those concessions if I want to get my house sold. no,
Right.
there may be some options out there. So
Yeah, exactly.
talk
Yeah.
to a lender like George to help you figure that stuff out and
That's
navigate that.
absolutely right. That's absolutely right. You have to have a good lender that knows how to find you money when possible,
Yeah.
and couple that with your particular situation.
So as we're going to be wrapping up, and I'm going to ask you about. I'm going to go ahead and ask you now. You've written a book, right?
Yeah.
You,
Yes, sir. Yes,
you've
sir.
got a book. There's going to
I
be a
got it.
link in the show notes that people can go to a site and give them their name, give you their name and their email address, and get access to the book that helps
Right.
explain a lot of this and more.
Exactly, exactly. So it's a book that breaks down the home buying process, talks about the loan types, talks about what you as a potential home buyer should expect, what you should be getting ready to get to that point if you're not ready yet. So it breaks all that in detail, and I wanted to put that out really to help people be in a better situation than coming and saying, I don't know what to do. Here, look, here's a guide to help you, and it just makes for a much easier transition and process as someone wants to go through that buying process. So, um, yeah,
Yeah.
look, people, hey, yeah, like you said, click the link, check it out, get the information. It's free information. It's a free ebook, free information. It's really just about getting that information out there to help as many people as possible.
Yeah. And if you are thinking about selling a house, imagine the shock from a buyer or a buyer's agent if you or your listing agent made that resource available to a buyer that's
Right,
helping them out. It's like, oh, you're trying to help me, get better at all this stuff. So
right,
you can still use that. You don't have to just be a buyer to use that. You might be able
right.
to use that as a seller. So we've talked about the 4 different types of loans, and kind of gave us a good thumbnail about each one of those, good description about each one of those. For the buyers, um, the the benefits to the benefit to an FHA loan for a buyer. Let's just summarize that real quickly.
All right. So benefits for conventional for a buyer. Um, you're looking at the opportunity if you have 20% down or more, you lose that mortgage insurance. You don't have to pay that out of pocket or anything. You avoid an additional closing costs like funding fees that you have to pay with the FHA, with the VA, with the USDA. They have funding fees that you have to pay up front. That's a part of your closing costs in most cases. Um,
Debt to income, or
yeah, well, the debt to, so debt to income with that it's to me is the to me I guess the benefit really is the mortgage insurance if you get to get rid of that.
yeah,
Um,
because you mentioned
and
with the FHA, it's a maybe a little bit lower interest rate, but by the
lower interest,
time you add the mortgage insurance to
right?
the payment could be more. It could be less
Could be more,
interest.
right?
So you have more of your principal interest going to the equity to pay off the principal. So your equity builds a little bit faster, but you're out of pocket a little bit more because you're paying that insurance because you didn't put
Yeah,
20% down.
yeah,
So
yeah.
even though a buyer might think, well, I get a lower interest rate. How come my payment's higher? Well, it's higher because you've got that mortgage insurance premium
The
on
mortgage
there
insurance is on it. Yep.
that's going to stay on there. Where I think in my case, I didn't refinance, but if I had refinanced, then I could have gotten it to fall off after about 5 years instead of
Right.
7 years, or going through and asking about all that. And it would have dropped my payment like 110 or 120 bucks would have, knocked my payment
And
down.
and you can get rid of it if you're on the conventional. You can get rid of it without refinancing because you could just ask the servicing company, "Hey, I need to get my. I want to see if I can get rid of my mortgage insurance," and they'll reanalyze the value and everything of the home, and then they say if you fall under that 79% loan to value, they'll get rid of that mortgage insurance for you. So
So
you
they'll
don't
go
even
through
have.
and they'll order an appraisal to go through
Yeah,
all that.
yeah,
I just kept waiting around and didn't do it, but I could
yeah,
have saved me a
yeah.
little bit of money if I'd done it. And I wish I had. And then we didn't talk about this earlier, but from a buyer's perspective, the VA and the USDA, even though you are they're able to borrow 100%. You mentioned funding fees, so that's going to be, if it's a $300,000 house, they're going to be adding some funding fees to it. So their loan may be 305,000, 7,000, whatever that their loan is in there. It's going to be some funding fees that could typically be added, or they may be paying that as closing costs. They can, depending on the loan and the lender.
You have that choice. Generally, I say 9 times out of 10, the borrowers are just going to add that to their loan amount, and it's for FHA. I think it's 2.25% of your loan that they say they take whatever your loan amount is. They add it back into the loan. So it's USDA has a funding fee, VA has a funding fee. This is the price of doing business with the government.
Exactly.
Right.
Hey, George, thank you so much for being my guest today. Glad to have you on here to talk about the 4 major types of loans that will help the folks out there that are either looking to sell or looking to buy understand a little bit better as they make decisions for what's best for them. So thank you. Got any last words?
Hey, if anybody out there got questions, you don't have to be a client of mine to ask a question. I'm trying to really and truly, I'm setting up a program that's going to be called Ready to Buy, and it's going to be to help people get to the point where they are ready to purchase, to come from wherever background they have, wherever they come from. You get the information, because it's about information. So my favorite book says, "My people perish for lack of knowledge," and so I want to give knowledge to as many people as I can about the industry that I've been in for over 18 years.
And I like that book a whole lot too. I think it's the most published book in the world.
That's right.
Yeah. Hey, George, thank you so much for today, and I appreciate it. And be talking to you soon.
Yes, sir. Thank you.
Hey, thanks for hanging out with me today on the Get Me Ready to Buy podcast. Hopefully you found all this information helpful to you, and it's made a little more sense out of what it takes to actually buy a home, and you feel a little bit more confident about your home buying process. Now, again, as I shared earlier, if I can help you buy a home in the Mid-South or find you an agent wherever you are, just reach out to me at midsouth.homes or whatever link is here on this podcast or down below in the YouTube channel. If you're listening to this on a podcast, I just mentioned the YouTube channel. There is a Get Me Ready to Buy YouTube channel where you can actually watch the podcast if you'd rather do that. If you're watching this on YouTube and you'd rather listen to it, you can find the link to getmereadytobuy.com, and you'll find where you can listen to all the podcasts wherever you get podcasts. I hope that you'll also rate and review the show. There's a link here in the notes, in the show notes, or here where you can review the show and rate it so that others who are looking to buy a home just like you can find it, especially if you found it helpful. And I would love a 5-star review if this has been helpful to you. The other thing you can do is remember to get your score at readytobuyscore.com. And as always, hit the subscribe button so that you are the first to find out the latest information about what it takes for you to be ready to buy a home. Have a blessed day.